Bitcoin has treated ahead of the fundamentals in terms of global liquidity. So gets elected, he has this whole platform of how he's going to, make America great again, print a bunch of money, get companies to invest in American productive capacity, do lots of things in the crypto space, tax space, everything. It's going to be amazing in Trump world. And everybody else around the world, to compete with America, is going to have to print money as well to help their own domestic industries, like in China.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Arthur Hayes will talk about why Bitcoin will crash before skyrocketing to $250,000. Is this the calm before the storm? Let's catch him up to know more about his bold prediction.
Unfortunately, it seems like the liquidity situation is disappointing. So moving over to the U.S., obviously the 10-year Treasury has, been on a tear, price down, yield up, since the Fed started cutting rates in September of last year. And if you'll remember, it was quite interesting that the Fed started cutting rates right in the fall, right before an election cycle, probably to help Harris win. Obviously, she didn't. As soon as Trump gets elected, Powell's like, oh, I'm not resigning. There's been various former Fed governors, William Dudley to be specific, who wrote a very provocative op-ed in Bloomberg a few years ago saying how the Fed should actively use its power of influencing quantity of money and price to make sure that Donald Trump doesn't get elected. And he was the president of the New York Fed, the most powerful Fed governor bar the chairperson for many years. So he definitely still has an influence. And at a recent press conference in November, right after the Trump election, Powell was asked, has anything changed because of the election? And he stated that, we're looking at some new super secret economic variables that might influence the trajectory of our path, which is code words for saying, maybe we slow down, maybe we start raising rates because of the election. So I think as much as Powell tries to play the I'm not a political person game, he's very political. Him and Trump don't like each other. Trump obviously is lambasting him over Bloomberg and, the newswire saying, cut the money. I need, cheap money and lots of money to revitalize American industry. And Powell is saying, no, I'm here to fight inflation. So obviously inflation is still above their target. So if they were going strictly by their own self-imposed measures, they shouldn't be cutting rates at all and raising them. On the other hand, you have a federal deficit that's exploding higher. And I know people like to cite the Department of Government Efficiency, the meme department. That isn't a department at all. It's literally just an advisory position that Trump created for his boy Elon. Yeah, an actual department requires U.S. congressional approval, and that hasn't happened yet. Not to say it won't, but DOGE is literally just an advisory body. It has no power. Yes, Elon can memify, profligate government spending as much as he wants, but that's not new news. I don't think politicians particularly care. And if you're going to get reelected in 2026, are you going to go against your seniors and the defense industry and cut their spending, which is the major, 70% of government spending in the U.S. is healthcare and defense. Those aren't getting cut, in my opinion.
Bitcoin's mempool, the queue where pending transactions wait to be processed, is currently practically empty, according to CryptoPoint's Julia Moreno. This is an unusual event, as Bitcoin's network is typically bustling with activity. The sharp drop in transactions has led to a significant decline in network fees, now at just 1 sat/VB, the lowest in months. Some Bitcoiners see this as a concerning sign, while others argue that it reflects the evolving nature of the network. Casa co-founder Jameson Lopp believes the empty mempool signals a decline in Bitcoin's sovereign usage, meaning fewer people are using it for direct transactions. Instead, many Bitcoin holders seem to be sticking to the HODL strategy, accumulating BTC and waiting for price appreciation rather than spending it. However, Lopp notes that the number of unspent transaction outputs, UTXOs, is also falling sharply, suggesting that fewer coins are moving into self-custody wallets. Some see this trend as a threat to Bitcoin's long-term sustainability. Bart Moll, host of the Satoshi Radio podcast, warns that Bitcoin's digital gold narrative may be harming its fundamental use case as a peer-to-peer currency. If people stop transacting with Bitcoin and only treat it as a store of value, the network's transaction-driven security model could weaken over time. On the other hand, Canadian developer Peter Todd sees the low on-chain activity as a sign of Bitcoin's growing efficiency. Many transactions that would have previously taken place on the Bitcoin blockchain are now happening on the Lightning Network, a second-layer solution designed for faster and cheaper payments. Since Lightning transactions don't appear on the main Bitcoin blockchain, this shift could explain the lower activity in the mempool. Whether this trend signals a problem or an evolution of Bitcoin's role in the financial system remains up for debate. What is clear, however, is that Bitcoin's network dynamics are changing, and how that impacts its long-term adoption is something the entire crypto community will be watching closely.
So, the deficit isn't going anywhere. You have an antagonistic Fed. You have a Treasury maturity profile that's completely fucked up because the U.S. has to roll over something like $6 trillion of short-term debt at higher rates this year because Yellen wanted to juice the markets for Biden and Harris during their term. And so you have all this coming together, and you have a debt ceiling issue where, whether it's today or tomorrow, I don't know when the day is, the U.S. government cannot net issue any new debt to fund the government. And so Trump has a choice, I believe. He can either have a crisis happen today or, in the near future, 3 to 6 months, in terms of, an antagonistic Fed, a Treasury maturity profile that is not commensurate with affordability for the government and its programs, and the inability of the banking system to buy more of this debt. And the trigger for sort of, a little mini financial crisis could be, okay, I'm going to tell Bessent, the new U.S. Treasury Secretary, that he should not run down the checking account of the government to help forestall the government shutdown. Let's have this debt ceiling fight today. Every time there's a debt ceiling fight, everyone gets all up in arms. People get afraid that the U.S. government's not going to, pay out on its bonds, which is ridiculous. Of course, they're going to raise it. It's just a political game, and it depends on which particular congressperson or senator gets their piece of pork for their district. And so once they work all that stuff out, it'll get raised. The question is, what happens in the interim? Do we get sort of a liquidity flush out, get the Fed seeing religion again? You need to print money. You need to allow the banks to put as many treasuries on their balance sheet as possible to help Trump and Bessent enact their campaign promises. Stop being an asshole. For the financial system, Pax Americana, the empire was going to crumble unless you give us the free money. So that's sort of my premise on the American side of things, of why I think it's politically expedient for Trump to have the bad thing happen right now when he can blame it on Biden and Harris. Why have it happen in 6 months' time?
Earlier than better.
It's your problem.
Solana's meteoric rise has captured the attention of investors, with its staggering 2,315% growth over the past 2 years, par outpacing Bitcoin's impressive 533% gain. This performance has led many to wonder if Solana, rather than Bitcoin, is the smarter investment for the future. With its rapid advancements in decentralized finance, DeFi, blockchain gaming, and artificial intelligence, Solana is proving to be much more than just another cryptocurrency. It's an evolving ecosystem with massive potential. Unlike Bitcoin, which primarily serves as a store of value, Solana offers a high-speed, low-cost blockchain that is actively challenging Ethereum's dominance. Its ability to handle transactions faster and more efficiently has drawn in developers and businesses looking for scalable blockchain solutions. Some analysts even suggest that Solana could eventually overtake Ethereum, a shift that would push its market value even higher. If that happens, Solana's price could skyrocket, potentially reaching $500 or beyond. The biggest catalyst for Solana in 2025 may be the approval of a spot Solana ETF in the U.S., with billions of dollars already flowing into crypto ETF. A similar investment vehicle for Solana could fuel significant price gains. Given its current momentum, Solana is making a compelling case as the most exciting crypto investment today, one that might just make Bitcoin look outdated. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.